In the year 2025, the world of cryptocurrency was no longer a fringe topic whispered about in underground forums or among tech-savvy enthusiasts. Instead, it had evolved into a mainstream financial instrument, deeply integrated into the fabric of global commerce and personal finance. The landscape was vibrant, yet complex, and investors needed to navigate it with both caution and curiosity. The year began with the global economy still recovering from the tumultuous events of the early 2020s, which had seen the rise and fall of numerous cryptocurrencies and the emergence of regulatory frameworks that sought to tame the wild west of digital currencies. The lessons learned from the past were fresh in the minds of investors, many of whom had either lost fortunes during the great crypto crash of 2023 or had seen their investments soar to unimaginable heights. The volatility that had characterized the early days of cryptocurrency was still present, but a new era of stability was beginning to take shape. Central bank digital currencies, CBDCs, had become a reality in many countries, with nations like the United States, China, and members of the European Union rolling out their own digital currencies. These CBDCs promised to provide the benefits of cryptocurrency: speed, efficiency, and lower transaction costs, while being backed by the trust of national governments. Investors were keenly aware that CBDCs represented both an opportunity and a challenge for traditional cryptocurrencies like Bitcoin and Ethereum. While CBDCs could legitimize the concept of digital currencies, they also threatened to overshadow the decentralized ethos that had driven the original crypto movement. In 2025, Bitcoin had solidified its position as a digital gold, often seen as a store of value rather than a medium of exchange. Its price had stabilized significantly, hovering around a level that many analysts considered a fair reflection of its utility and scarcity. Ethereum, on the other hand, had evolved into a robust platform for decentralized applications and smart contracts. The transition to Ethereum 2.0 had been completed, making the network more efficient and environmentally friendly. This transition attracted a wave of developers and investors, eager to leverage the new capabilities of the platform. Investors in 2025 needed to keep a keen eye on the growing ecosystem of decentralized finance, DeFi. DeFi had matured, with protocols that allowed users to lend, borrow, and trade assets without traditional intermediaries. The innovation was dizzying, with new financial products and services emerging almost daily. However, the risks were equally pronounced. Hacks, exploits, and regulatory scrutiny had plagued the DeFi space, and investors were reminded that the potential for high returns came hand in hand with significant risks. Understanding the underlying technology and the teams behind these projects had become essential for any serious investor. As the crypto landscape evolved, so did the regulatory environment. Governments around the world had begun to implement clearer guidelines and rules for cryptocurrency transactions, exchanges, and initial coin offerings, ICOs. This regulatory clarity was a double-edged sword. On one hand, it provided a level of legitimacy that attracted institutional investors and mainstream adoption. On the other, it posed challenges for projects that thrived in the gray areas of regulation. Investors needed to stay informed about the legal landscape, as changes in regulations could dramatically impact the viability of certain cryptocurrencies or projects. NFTs, or non-fungible tokens, had also matured by 2025, transcending their initial association with digital art and collectibles. They had found applications in various sectors, including gaming, real estate, and intellectual property rights. The market for NFTs was now a multi-billion-dollar industry, with established marketplaces and platforms facilitating transactions. Investors were beginning to understand the value of digital ownership and the potential for NFTs to revolutionize how assets were bought, sold, and traded. However, the speculative nature of the NFT market meant that investors had to approach it with caution, as the hype could easily lead to bubbles that burst. Sustainability had become a crucial consideration for investors in 2025. The environmental impact of cryptocurrency mining had come under intense scrutiny, leading to a shift towards more eco-friendly practices. many cryptocurrencies had adopted proof-of-stake models, significantly reducing their carbon footprints. Investors were increasingly prioritizing projects that aligned with their values, seeking out those that demonstrated a commitment to sustainability and social responsibility. This trend was not only ethical, but also reflected a growing recognition that environmental, social, and governance (ESG) factors could influence long-term investment performance. In the realm of investment strategies, diversification had become paramount. Investors were no longer putting all their eggs in one basket, as the crypto market had proven to be unpredictable. A balanced portfolio that included a mix of established cryptocurrencies, promising altcoins, and innovative DeFi projects was seen as a prudent approach. Many investors were also exploring the emerging field of tokenized assets, where real-world assets like real estate or commodities were represented on the blockchain, opening up new avenues for investment. Education had become a cornerstone of successful investing in the crypto space. Online courses, webinars, and community forums flourished, providing resources for both novice and experienced investors. The importance of understanding blockchain technology, market trends, and the fundamentals of different cryptocurrencies could not be overstated. Investors were encouraged to engage with the community, attend conferences, and participate in discussions to stay informed and connected. As the year progressed, the influence of technology on the cryptocurrency landscape became increasingly apparent. Artificial intelligence and machine learning were being integrated into trading strategies, allowing investors to analyze market trends and make data-driven decisions. The rise of algorithmic trading platforms had democratized access to sophisticated trading tools, enabling even retail investors to compete in a market that had once favored institutional players. However, the reliance on algorithms also raised questions about market manipulation and the potential for unforeseen consequences. One of the most significant developments in 2025 was the rise of decentralized autonomous organizations, DAOs. These organizations operated without central leadership, governed by smart contracts and community consensus. Investors were drawn to DAOs for their transparency and inclusivity, as they allowed participants to have a say in decision-making processes. However, the challenges of governance and accountability in a decentralized environment were becoming evident. Investors needed to carefully assess the structure and objectives of any DAO they considered joining, as the lack of traditional oversight could lead to mismanagement or exploitation. As the cryptocurrency market matured, so did the narratives surrounding it. The conversation shifted from mere speculation and price predictions to discussions about the transformative potential of blockchain technology. Investors began to recognize that cryptocurrencies were not just financial instruments, but also tools for social change, enabling financial inclusion and empowering individuals in underserved communities. This broader perspective attracted a new wave of socially conscious investors who sought to align their financial goals with their values. The geopolitical landscape also played a crucial role in shaping the future of cryptocurrency. Countries that embraced innovation and fostered a supportive regulatory environment saw an influx of investment and talent, while those that resisted or imposed heavy restrictions risked falling behind. The competition for crypto dominance became a global race, with nations vying to attract blockchain startups and cryptocurrency exchanges. Investors needed to be aware of the geopolitical factors at play, as they could significantly impact the performance of their investments. In this dynamic environment, the role of security could not be overstated. Cybersecurity threats continued to evolve, and investors were reminded of the importance of safeguarding their digital assets. The rise of custodial services and hardware wallets provided options for secure storage, but the responsibility ultimately lay with the individual investor. Education around best practices for securing private keys and recognizing phishing attempts became essential knowledge for anyone engaging in the cryptocurrency space. As 2025 drew to a close, the cryptocurrency market was a kaleidoscope of opportunity and risk. Investors had learned to embrace the volatility while remaining vigilant about the potential pitfalls. The lessons of the past had instilled a sense of caution, but the allure of innovation and the promise of financial empowerment kept the spirit of exploration alive. The future of cryptocurrency was not just about individual gains. It was about shaping a new financial paradigm that could redefine how people interacted with money, assets, and each other. In this brave new world, investors were not merely spectators. They were active participants in a global movement that transcended borders and challenged traditional financial systems. The journey was fraught with uncertainty, but it was also rich with possibility. As they navigated the complexities of the cryptocurrency landscape, investors were reminded that the key to success lay not just in understanding the numbers, but in embracing the transformative power of technology and the shared vision of a more inclusive financial future. The narrative of cryptocurrency was still being written, and every investor had a role to play in shaping its unfolding story.